All right. Good afternoon, ladies and gentlemen. I'm Maurice Jackson. I'm proud to present to you Empress Royalty, a gold, silver royalty streaming company that has 3 robust projects that are forecasted to generate $55 million over the next 5 years with a $47 million NPV and also a $27 million market cap. And all these numbers, by the way, ladies and gentlemen, are in U.S. currency, okay? The company has a number of catalysts on the horizon, and here to share more about this compelling investment proposition is the Executive Chairman for Empress Royalty, Mr. David Rhodes.
Hopefully everybody can hear me, and if I'm a bit loud, I've just arrived on a flight, usual bad ear from landing, so I'm a bit loud. Just raise your hands if I'm too loud. If I'm not loud enough, raise your hands again. So no hands in the air, so that's okay. Participation, involvement here. So thank you for that very nice introduction. So just thought I'd give a little more kind of personal, in-depth chat about Empress. Obviously, Alex did the presentation earlier today, so I don't want to go through that all over again. But I'd just like to hit on a few of the slides from that presentation and chat a little bit about the history of it, why it's here, the philosophy from the management team and throughout the business, and the people, because people obviously are important to drive businesses. There are some forward-looking statements. You've probably will have heard this, and I think it's worth really reinforcing. We set up this business to create new royalties. So we are not trading paper, we're not buying them from someone else, we are doing the hard work of creating something. And that's important because, well, for investors and for management, it takes time to create something. We need to find the opportunities, we then need to negotiate, we need to do the due diligence, we need to make sure the due diligence is adequate, meets our requirements on all the aspects of due diligence from technical to ESG. And then, not all of them obviously are good enough for our portfolio. Then we have to start again and obviously do the process again. So it takes some time to create things. But that is why we set this company up to create, because we feel there's a huge advantage in the marketplace, providing a source of financing via the stream and royalty to mid-tier to junior mining companies. It does, though, you'll hear this a bit, takes time. But patience is a virtue. We are seeking and developing a diversified portfolio. Gold and silver, though, is the key metals, but diversified in the sense of size of projects, also locations. The one thing you'll see, and it is something we make sure investors are aware, is that we are looking at a more diversified in geography than some of our competitors. The backbone of the business, and I'll come on to that next, is Endeavour Financial. That is a global financial investment house, experienced throughout the whole globe. So we have worked and operated successfully in lots of different parts of the world. Once we know the country, we've successfully transacted in it. We've got the legal regime, we've got the governmental regime, we know the whole mining regime in that sense, all the regimes. We're then happy to recommend it to the board of Empress as a potential country and an opportunity. But that's only once it's been through our history of being able to operate and work in those countries. Another key driver for the business, and when we set this up, we looked at the other people in the space, and there's the companies that have got huge portfolios of geological hope, let's call it that. 10 years, 15 years to be a mine. And they've been quite successful, and some of them obviously have grown and are very large on that basis. But it's taken them a long time to obviously get that revenue coming in, because it takes 10 to 15 years or maybe more for the geological exploration to become a mine. And obviously a huge amount of capital investment, which is uncertain in different worlds. Excuse me. So we set up Empress to really look at revenue, getting in revenue from our investments as soon as we can. So very much near term, in producing assets, those that produce revenue. Revenue, we believe, in any cycle is key. When you've got revenue coming in, it covers your costs, brings money into your treasury, which you can then reinvest. So that's one of the key determinants of setting up the business. And lastly, to do all of this, you need strong mining finance people, people who know the industry, have the skill sets to be able to structure these investments in these different locations. And also, we're only 2.5 years old, a team that know each other, a team that can quickly have confidence in each other, work together, and have the reassurance and be able to rely upon each other to make sure the right investments are made at the right time. The backbone, which is mentioned quite often, obviously, is Endeavour Financial. There's quite a few people, when I introduce the team to you later, have got Endeavour Financial on their CV. Some haven't, but most have. Endeavour Financial, I'm the managing director of Endeavour. We are one of the largest global mining financial advisors in the business. If you're a mid-tier or junior and you're looking for finance, you call us. You may not like the offer of what we're going to provide you in the sense of how much we're going to charge you, then you may go to a competitor, but generally they come to us because we've got all the contacts, all the knowledge, and the daily business of Endeavour Financial is financing, development, single asset mining companies. And I won't ask more questions later, but we've been doing it for 30 years. It's all we do. Awards galore, and obviously plenty of examples I can give you if you want more about the CVs of Endeavour Financial. As I said, really, creating value is key for us, driving cash into the business. Serendipity in Peru. Sounds like we've got a team site visit happening shortly, which is fantastic. This was an existing producing mine. Gold price shot up a couple of years ago. The company went, "Ooh, we've got a big fat margin now. How do we maximize that? We need quick capital into our business to expand it." And that's what happened to Serendipity. We got involved. It's a private company. The people behind it are well respected in the business. They're very localized in Peru. And you may remember we did this when all the election was going on. And there's lots of hype around the election about, oh, Peru, mining, boo-hoo-hoo, they don't like it, anti-mining. We've worked in Peru for, well, David Lang has worked in Peru, one of our key guys, for over 30 years. Born in Chile, Spanish speaker, and he knows mining is key to Peru. Mining is protected in Peru. As long as it's local, as long as you treat the local people right, you give everybody a fair reward for the business, also a fair reward for undertaking in the local community the social programs, you're protected in Peru, and that's the key thing. Tahueto is a development asset which is now ramping up, so another asset producing money for us. That's now called Luca Mining. I'm actually the chairman of that company, so I can't say too much because I'll obviously say things I shouldn't say. But the reason why I'm the chairman is when we invested into Tahueto as Empress, it's a key asset for us. And part of our investment theses, as well as the equity and the debt we put in there, was that I became chairman so I could protect not only my Endeavour Financial interests, but also Empress interests. So I'm chairman there protecting the company's investment in that asset. The third one is Manica. We've known as Endeavour Financial, just to confirm whose hat I'm wearing on this. Manica is Mozambique. It's a gold mine. It was half built. We put the rest of the money in to finish the gold mine. And that's well into production now. I had dinner with one of the directors a couple of days ago, and it's going very well at the moment. Manica is producing money for Empress, which is the key driver there. Lastly, we've got a development project, Pinos. That's probably got a bit of time. I think last thing I heard is a bit more drilling. Got another study to do, and hopefully that'll be one of our assets in a year or two's time, but that's on the horizon. All this kind of chat is leading to what we are very much focused upon, which is our gross revenue number. Some people say, okay, if you're taking a strategy of getting key assets in, you're taking your time, you're making sure they're good assets, then you've got good news. You get your revenue coming in, but then you've got your costs of keeping the business going. That's going to negative. The good news with royalty companies and streaming companies, it's a low-cost business to keep it running. So we are very low cost. There's half the team are here in the room. And there's only 3 of us. So there's only 6 of us in total. And I'll come through some of the names, some of the consultants we have working with us as well. So it's a low-cost business. So you can be careful, you can be patient about doing the right transactions to drive that revenue growth. It's not like other companies see in the mining space. And it's always good to look at the burn rate for companies. If they don't get their mine in production, if they don't actually advance it forward, then some of them have a huge cost of carry. And guess where that cost of carry is coming from? That's coming from equity, if you're a non-producing company. We are forecasted gross revenue way above our burn rate. So we're now filling up the money in our treasury, which is key as our business. And that's only after 2.5 years of being in this space. Mentioned the people. Quickly about myself, I'm over 25 years in the mining finance business. I run Endeavour Financial for over 15 years. I was an investment banker before. I worked for Barclays Capital in London, New York, and fun days working in New York when obviously Chile was just becoming makes me sound old now, becoming a major copper producer. And actually, that was one of my first inflows into South America and that business. Then I joined Standard Bank, which is an African-based bank, so I did a lot of African deals. And also a bit of Russian deals in those days as well on that space. Alexandra obviously introduced herself earlier today. She did work for Endeavour Financial in London a while back, so she's got the Endeavour Financial stamp of approval. Jeremy Bond is a fund manager in Australia, so he's on the buy side, so he has a lot of the expertise of knowing the brokers, knowing the market, how that works and the dynamics there. Richard Virgil, he's our technical and also our business development guy. So he's the first guy, if you've got an opportunity, we'll have a look at it from the smell test, as we call it, and decide the due diligence required, and working with the team will start that process. But we've got a new CFO who has just joined us, and it's a consultant CEO, so it's an interim CEO, Xavier. And in due course, we'll seek to get a full-time CFO, sorry, Alex, CFO. But we don't have a huge requirement for a full-time CFO unless they take on a bigger role with the company. So we're very comfortable with having a consultant-type CFO in that sense. Natasha, top lawyer, acquisitions and M&A in the US. Fantastic to have from the whole legal side, corporate governance side on our business. Paul Mannering, he actually works with Endeavour Financial. He's a CFA. He looks after all the audit committee and controls that aspect to make sure everything works well from that side. Wes Roberts, too many years in the business. I won't embarrass Wes, but he's one of our grey-haired men that overlook all the technical aspects. Caitlin does all our IR. And if you haven't met Caitlin, you must introduce yourself, if she hasn't already introduced herself to you. Michelle Borthwick is our company secretary, and Michelle used to work for Endeavour Financial, and now she runs as part of her whole business of corporate secretary and corporate affairs in that sense. And lastly but not least is David Lang. David used to run as COO Endeavour Mining, used to work for Endeavour Financial and also with me at Standard Bank. David's got 35, 40 years plus experience, not only looking from the financing side, but also building mines and operating mines around the world. So a very valuable asset as part of the team. And that whole team together, and it's very much a team effort, looks at the opportunities, monitors the assets, and makes sure we get the quality investments. And I'm not saying they all start smoothly. No mining asset, when it ramps up, is ever going to work first time. It does take patience, takes time, but we've got the resources and the people here to make sure we're on the review, on the case, making sure we know what's going to happen and doing the monitoring to make sure these assets get into production and produce revenue for Empress. Part of the review process of the assets is protecting that revenue line you saw earlier, but the other key aspect for us is growing this business. I mentioned obviously the opportunities we get through Rich and the team. We get opportunities coming in, but through Endeavour Financial, as I say, we get every mining company in the world in the mid-tier junior sector phoning us for finance. we can put the assets we feel are suitable for Empress into the team, so they can review them, monitor them, and see whether they want to progress them. We have, as a result of that process, actually, I should step back. So about 6 months ago, we had some opportunities on the books. We're looking to potentially put some new assets on. But as a team, we went, just hold it. We saw the market weakening. We saw the equity markets getting worse. We saw the issues with potentially China coming, with the weakness in China, which we're seeing. So we did not put any new assets on the books. You might think from a business point of view, when he's talking about growth, you're going, oh, you're meant to be growing, why aren't you putting assets? Well, the key thing for us is getting a return on our investment. We rightly, by probably more educated luck, got it right. The equity markets are pretty shut now for mining companies, very weak. Even though gold's doing well and silver's doing well, generally, if you're a junior mining company, it's tough to IPO, tough to raise equity, and it's tough out there. So the opportunities we now have in front of us, which we've been working on for a good couple of months now, are good, solid investments with high returns, because there's limited third-party financing out there for these guys. So waiting, which was about 3 to 6 months for these opportunities, has been worthwhile. We're now in due diligence, exclusivity with them, and we're very close to actually putting these assets on the books. Last but not least, obviously, Caitlin, Alex, and I are here, so ask questions of us all. And I've been told if I avoid this slide, I get booed, because it's very important to scan this QR code to get your 25 points. And what do points make? Prizes. Oop. Any questions? Any comments? Anything? Oh, good. Gentleman first in the middle.
As you're negotiating deals for new royalties, is that typically a bilateral process, or is there any competition in bidding for that at a more level of scale?
Thanks, sorry. Bit deaf on the fly. So competition-wise, if we were buying royalties from third parties, so trading the paper, as we call it, then nearly everyone's doing that. We get investment banks sending us these emails with, Barrick's got 6 royalties, this company's got X number of royalties, and everyone's looking to do that. We are going directly to these companies ourselves. So we've got relationships with them. So serendipity, relationship-driven, went to them, said, hey, do you need some money? Yes. We know them. They trust us. That's business trust in that sense. And it was done deal. No competition. The 3 opportunities we showed you, 2 of the boards, we know 2 or 3 board members. So no competition in that sense.
I think it wasn't in this presentation, but in the presentation earlier today, you stated a 30% average IRR on the deals you've done. Can you talk about, is that just a function of there's much higher returns to be had at kind of the smaller scale, or is that driven by one especially good deal, or what's driven that level of return?
Greed, basically, on two factors. Yeah, we could do it for 5% IRR, couldn't we, really? We should be very generous people. Charitable trust or something. The 2 factors. Firstly, we're offering a solution which is quick, and also structures, it's very well, we're good at structuring, to be honest, finance. So if you go to a bank, you've got to pay them back in 4 years. If you go to equity, you're diluting half your market cap in this market, because it's pretty horrendous. So we're offering a solution which is long-term financing. You pay it back over the life of your mine. And we also are fairly, well, relationship-driven, so they know they're going to get the money, they've got the certainty, and that's why we're able to have those type of returns. Partly relationship, partly well structuring, and partly just hitting that junior market. And also some of the countries we go to, I'll be honest, there is 0 competition. Then we can be, have suitable returns to match that.
I guess if I could follow up, it's more like companies are going to Endeavor Financial looking for like financing solutions, right? It occurs to me that selling you guys a royalty on which you earn a 30% IRR is quite an expensive form of financing for them, right? And so is that just a function of there's nothing else available to them that's actually the best they
I know, it's a good question. So, and let's be honest, we don't force them to do it. They've got a right to say no. It's not, we don't have those kind of pictures of them doing things that persuade them to do it. We're not that type of company. Firstly, it's the flexibility of the structuring side. We're flexible on our structuring. We're fairly quick. They know they're going to get the money. If you go to the equity markets, no disrespect to any brokers, but they'll say, yeah, market's open, we promise you this, and suddenly it shuts. And you're just about to develop your mine and you don't get the equity. Debt takes forever, and you've got to pay it back. So it's really the functionality of what we're offering that fits for them. And that's what, if you're doing, I mean, you could say, if they're looking at this presentation, they're going, 30%, why are we paying that? Well, they are doing, and they're happy to pay it because of the functionality we can offer them.
Yeah, all right. Thank you.
Yes, sir. Luckily, I can think back 2.5 years. 5 years is getting a bit murky. So one of the whole rationale here was because we saw the big guys, the Wheatons, the Francos, getting bigger and bigger. And Wheaton, $100 million ticket size. And a lot of the other guys were 50 million, and they're getting bigger and bigger. So from an Endeavour financial point of view, we saw a massive gap in the junior market. No one was doing the small 20 million and smaller streaming royalty deals. So there's no competition. You mentioned the competition aspect. No one can be bothered to get up for 10 million nowadays. I mean, for some people, it's change in the back of your pocket. So we saw that opportunity. And that's really taking back 2.5 years. Well, before that, obviously, the planning stage. The planning stage was, look, there is no one doing this. Okay, it's hard work, and you're doing a lot of work for 10, which Wheaton do for 100, but we can get way better returns. And we just did a deal as Endeavour Financial for Generation Mining, 240 million Canadian dollars. It's on a 1.5% IRR, Wheaton. 1.5% IRR, woohoo! It's fantastic from the company's point of view, but sadly, Empress couldn't match that. 240 million, or the IRR. So there was very much a niche. So we saw that niche 3 odd years ago, and the opportunity obviously takes time, as you say, a lot of hassle, a lot of admin, blah, 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 raising the money, etc. But it really was seeing a gap in the market. And a lot of other companies, competitors grew up as well. You saw other royalty streaming companies seeing the same opportunity, but not in our market. No one is really doing this. And I can't blame them. It's easier just to buy a bit of paper and do a press release and go, oh, we've spent 40 million buying this royalty. It's much easier doing that than what we're doing. But I don't believe, and I think you'll see as the money comes rolling in, the returns. The returns, which is the main driver, we're investors, the management are investors in the business, is getting returns for the shareholders. And that's the key factor. And that's where I think this market is important market. There is a huge opportunity here, and we are filling that opportunity and making the returns, as the gentleman in the blue mentioned.
You've seen other companies notice your success in the short term and try to copy what it is to set up a competition?
Well, we're certainly getting interest now because there's a lot of competitors that don't have the revenue coming in, which is quite sad. They've been doing it for 20 years or buying lots of stuff. 150 royalties, woo! But no revenue coming in. So they do get a lot of those people, looking at us now and saying, "Oh wow, okay, great, you've got revenue coming in." But copying us, no. It's quite a unique skill set when you think about the background of Endeavour Financial, the people around it, the mining finance skill set. Most of them, to be blunt, are investment bankers. Never structured a deal, or they just want to buy that, we'll sell it to you type of thing. It's a whole different, it's kind of a debt financing background rather than an investment banking side. So a different skill set. The future is bright and wonderful. And it's, so growing the business, but steady, sensible investments of growing the business. We're not going to put a press release out every week with we bought this, so we're looking for solid investments to get that revenue line higher and higher and higher. So short term is really stock appreciation, because the market's got to realize if you're making 7 million US, you're not going to be valued at 30. You should be 70 at least, 10 times on that basis. And then as we've got that portfolio, that cash coming in, we've got the certainty, then we will be looking to do a dividend policy. Well, I'll recommend it to the board at least, because we've got to be a yielding asset class. Otherwise you have to sell the shares, don't you, to make money. So let's pay you some money and you won't have to sell. You can keep holding them forever. Thank you. Thank you all for your time.